Hello friends, how are you doing today? I hope you've had a good day today. So, I've heard people say that, um, you know, the long-term consistency you get from investing long-term always beats out the short-term intensity. And that may be true, but I don't think in all cases. For me, I think what resonates is that people don't really get to accomplish the long-term great because they settle for the short-term good. So I guess that's my way of saying that again. Neither strategy is bad, and that you can get a lot of good from investing short-term, and you can get a lot of great from investing long-term. So on today's financial talk with me, of course, your go-to personal and business finance coach, I'm actually going to explore some of the reasons or disadvantages and advantages as well of investing, choosing one strategy over the other. So choosing maybe to go invest short term versus maybe investing long term. Okay. So what is a short term investment? So it can be defined as maybe temporary assets or investments that can be converted to cash or can be sold within a short period of time, and usually that is usually within a year to 3 years, and I would say maybe you can even stretch it out to 5 years at the most. And what are some of the examples of maybe instruments that are short term, that are created for like a short term investing? I would say one would be your typical CD, your certificate of deposit, your high yield savings accounts, bonds, T-bills, and maybe other money market accounts that are out there. In terms of trading, which I wasn't going to talk about, but I should mention it, is that some people do short-term trading, and that's basically investing in buying stocks or trading in the futures market. Again, it's short-term, so it's usually over a period of a few days to maybe even weeks at a time. And if you're going to do that, you're looking for some kind of lucrative return, which is possible, but you have to make sure that you have your fundamental and technical analysis down pat, okay? Because it is very risky, and you have to know what you're doing in order to be able to, get that big gain. Okay, so that's all I'm going to say about that in terms of short-term trading or investment in the stock market. Okay. So again, if you're investing in the short term and you're looking at the instruments I mentioned earlier, like the CDs, the T-bills, and all the other money market accounts, financial objective. Okay. Again, remember, those instruments are created for a short-term sort of focus. And so what are some of the things you're going to be looking out for to decide whether you want to go short term? I would say you're typically looking to protect your cash, okay? That's one of the advantages of going short term. It's highly liquid, okay? And it's within a short period of time, okay? So meaning that you have maybe some cash or a lot of cash that you're looking to use within that 1 to 3 year period. I would even say as high as maybe 5 years, but nothing more than that typically. Okay, nothing more than that 5 year period. Okay, so it's cash that you have on hand today that you're saving towards something. Remember, you never save just to save. You save to invest, even if it's for a short period of time. Okay, cash protected. But you also want that cash to be able to, you also want to be able to get a decent return on that cash. Okay, so you would consider those instruments that I mentioned. Okay, as far as why you would put your money in any of those short-term assets. Okay, and what are some of the things that you would have saved up for that you could put in these instruments? One could be a vacation. Yeah. Sometimes you think, oh, I want to go on vacation. I have this money and I'm just going to save it. Well, it could still do a lot more for you if you put it in a short-term instrument, because doing that will, like I said, protect your money and maybe help get you some kind of decent return. Okay, so vacation would be one. I would say if you're saving for something like a wedding, could be another. If you're saving maybe to even start your own business, could be another. Anything that you want to do, like I said, within a 1 to 3 year or maybe even 5 year period would be good. And depending on, I wanted to say college funds, but that's a little bit tricky, because ideally I would always advise to start saving for your child or children's college funds sooner rather than later, so you have, less pressure. You're forward looking, so you're saving now, meaning, years before they get into college, not when they're in high school, maybe when they're still in primary or elementary school. Okay, so depending on when you start to save for that, you could also put that money in a short-term instrument, actually. So again, it depends on your timeline as far as that is concerned. So let's talk about long-term investment strategy or investments. So long-term, basically, as the name indicates, is that you're investing over a longer period of time, and the time horizon typically is, I would say, for me, I would say anything 10 years and above. Okay, 5 to 10 years for me is more midterm, and depending on, again, what your goals are and when you started saving, of long term, I think 10 years or more. So so what are some of the instruments that are considered good for long-term investments? So we're talking about assets like stocks, real estate, and a good number of mutual funds that you could actually put into like a long-term, that are considered good for like a long-term investment objective. Okay, so what are the advantages of investing long-term? Unlike short-term, the advantages include the advantages include less risk. Less risk because you're investing over a long period of time, and that means less volatility. We don't like volatility. Okay, it makes you panic. All right, so I would say again, a long period of time. I said 10 years, and I'm saying advantages, yes. So less risky because there's less volatility, and really, I would say the advantages can be found between the relationship between volatility and time. If you follow me already, I think a couple of days ago, I posted like a comparison of short to long term, between short term and long term investing. And you would see on that post how if you invest over a long period of time, you tend to lose less. Okay, like I said, it lowers your risk. Okay, and increases your return. Okay, it's proven, and there's data to back that up. Okay, so again, so that's another advantage. In some cases, you get some tax benefits as well. There's some tax advantages to doing long-term investment. Of course, diversification of your assets. And then, of course, if you're doing the stock market, dividends, if you pick the right stocks, you can get dividend payments over time, and that's income for you. So those are some of the advantages. Some disadvantages, I would say, is that I guess the main disadvantage is that you tend to have less control over your money because you're investing over a longer period of time, and so you don't really have access to say, I want to take out this money and use it right away. You need to be able to wait out seeing that high return, okay, on your investment. Okay, so you need to wait out. I think the waiting actually is the biggest disadvantage, is that you have to wait it out to see those profits start to come in. Okay, so as I said, neither one of the strategies is bad. It just depends on kind of what your financial objectives are. When you start to save towards those objectives would also help you decide whether you should go short or long. Okay, that's the easiest way to put it. Okay, and that's how you should think about it. Is okay, what am I looking to do? Am I looking to use this money anytime soon? Am I looking to protect my cash? Am I just looking for a decent return? If you're thinking about all those things and you're saying yes, 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 consider doing a short-term investment. But if you're looking to maybe save over a long period of time, you want something that is not too risky, would give you good returns, then you should go long. And one example I can think of is retirement. Okay, your retirement you should always consider going long again, but that depends on when you start. This is assuming that you started saving earlier on in your career towards retirement. So that's all I have to share with you today. If you find this video useful, helpful, please share with your friends, your family, colleagues, business associates, like I always say. Okay, and if you have any questions, please feel free to comment below the video. I want to wish you well. Take care of yourselves. Until next time, enjoy the rest of your week. Bye now.